SoFi Technology, ticker SOFI, is up around 5% today. Now, what are the key levels we want to be paying attention to on this stock? So you can see, to cover the supports first, at 750 you had our first deviation on the 6-month chart. That's kind of that range we came into before we now getting this reversal move. And if we did come any lower and kind of use it as a range, because it's only 30 cents, we also have 720, which is our first deviation, but from a 1-year outlook. So they are two key supports to be paying attention to. Now, if we continue to the upside, obviously 850, that's our 3-month anchored VWAP. Again, we don't pay too much significance on this, but can usually just give us a good kind of signal in which way the stock should be, if we're a bit more oversold, a bit more overbought. But as we come in through here, we do have between $8.90 and $9.10 is going to be our statistical mean. So this is considered fair value on the stock. So when we're looking at SoFi, normally we'll be long bias at these first deviations and look to trade it towards and target that 8.90 to around 9.10. Once we come into here, from how I trade, which is a reversal standpoint, I won't be looking to hold stocks past or SoFi past this level, because again, then that's fair value. That's where I expect the price to go to. After here, it becomes a bit more of a gamble whether it will continue up or push to the downside. So that will be the key target. Now, if we do break it, again, if you are holding through fair value or you're a short bias trader, then this can be used as a target, or again, a short bias level. And that's going to be 1050, 1060, which is our first deviation between the 6-month and the 1 year. But again, on the oversold scale, obviously these are the oversold scales, and this is the overbought deviations. And if we start to break that, we do have another level to be paying attention to around 1220, which would be our second deviation from a 6-month, which would be another strong resistance. And normally, again, we could target these if we're long bias. I'm not always a massive fan of shorting these first deviations, because again, if you understand standard deviations, that's 68% of the data should trade below it. So again, there's still a good chance that it can break through and carry on. However, when you come into this second deviation, 95% of the data is likely to trade below it. So instead, it's normally a higher accuracy to be trading the second or third deviations.